what's so difficult about these conditions is just it's so unpredictable. I mean, it goes hour by hour, right? Tariffs are on, tariffs are off, this country, that country. Of course, tariffs affect goods, and a lot of our economy here in the UK is a service-based economy. Yeah. But as I think about it, it's very hard as a business person at the moment to predict anything, right? So you just have to be prepared for everything and focus on the things you can control. But you're not yet seeing any of these things really crystallize into risk. And what we have to look at is not just the first order consequence, right, which means more inflation if tariffs are put on, but what are the second and third order consequences of that? And I was thinking about it watching the earlier part of the show. If you think about a bank, where did they make money? Well, the trading parts of banks are probably making a lot of money at the moment because of all the volatility. But then you look at things like advisory, it's all gone risk off. Yeah. So what are people going to do?
But then I will say is, and I learned this from a very senior banker friend of mine a couple of years ago. He said, well, all the big flashy deals, the IPOs, the big M&A, that they are going to crater in this current environment for all of these banks, no doubt about it. But actually the refinancing, kind of like the more boring stuff that's going, is going on all the time, albeit at a higher price. So the flashy stuff that you get your Barclays or whoever it may well be right at the top of the IPO prospectus or the M&A, that stuff doesn't happen. But there is an awful lot of the other stuff which is just keeping it churning over, isn't there?
Well, I think the real issue there is what's going to happen to credit for businesses and consumers over time. Because if this disruption flushes through into the real economy, creates inflation and possibly a recession at the same time, then you could see a lot of pressure on consumer balance sheets, you could see a lot of pressure on corporate balance sheets, and that's when it's going to start to flush into the banking system, because all of those things on the balance sheet are currently there, sitting there, and impairments have been quite low for a long time now. So if those start to spike, that could really affect the industry.
I'm going to ask about the consumer because I know your big background too in retail banking, and the reality is the consumer this time around is showing some level of stress. You're seeing it in the early and services numbers, the PMI. We're showing us that the consumer has pulled back on those sort of services. This is a consumer that seems to be more reactive to inflation these days. Would that be the right assumption? Because they've had the COVID, post-COVID era where they actually knew what inflation was again. So this time round, the sentiment shift is quite strong, isn't it?
Yeah, I think with the consumers, we always tend to look at the inflation rate. But actually what we've got to look at is the history of this. Because, and you were making the point earlier, Steve, about shrinkflation, right? So you look at shrinkflation. I went out to dinner last night at a restaurant I've been going to for 20 years. The bill was probably twice what it was pre-COVID.
Seriously?
Yeah, I mean, everything's been baked in now, and what that just adds more and more stress. So people are starting to pull back on what they spend. Talk to any taxi driver in London and they'll say, volumes have fallen off a cliff since January because people are just being much more careful about how they spend their money, and that's got to feed through into the real economy. And that's before you get to the localised issues that we've got in the UK, like the change in national insurance contributions that went through this month.